Hey everybody, hope you're having a great day. Today I'm going to make a quick video going over the 7 most popular ways to finance real estate today. Now, I think most people have a general idea of what direction they would go in terms of financing a home or any piece of real estate, but I think a lot of people are really surprised when they hear about the different options out there. And as you get as you get further down the line in life and you start thinking about things like a second home or retirement home or maybe upsizing or downsizing or investment property, it helps to know what options are at your disposal. So I hope this is of value to you. These are the 7 most popular ways to invest in real estate right now. Now, the first is cash. And so while this obviously isn't viable to everybody, it's worth mentioning because it makes up a little over 1/3 of all real estate transactions in the US right now. And we've seen that number trend up, especially over the last couple of years because home equities have been rising. The second is the conventional mortgage. So this is the most common loan type for homeowners and investors alike. And so these can be non-conforming or conforming. And this is where you hear about different loan programs like adjustable rate, balloon mortgages, hybrid, interest only, and those kinds of things. One misconception when it comes to a conventional mortgage is that you have to put down 20%. Of course, that down payment is going to depend on your own financial situation. You could put down really as little as 3 to 5% depending on your own circumstances. The third is the FHA mortgage. And so these are loans that are insured by the Federal Housing Administration, and they're really designed to incentivize home ownership. So they're intended to be used by the homeowner who's going to be purchasing and living in that home. Now, there are some incentives. You could put down as little as 3.5% with an FHA mortgage, but then on the flip side, you have to pay private mortgage insurance or PMI for the life of the loan. When you're comparing FHA to conventional, there really is no clear-cut winner. This is something that's going to be a personal decision. You're going to have to sit down with your lender, look at both of them side by side, and see which one fits your needs. The fourth are VA loans. And so these are loans that are available for active military and military veterans. Now, Veterans Affairs loans do not have a minimum credit score. You don't have to pay private mortgage insurance like you do through FHA, and borrowers could borrow up to 100% of the loan value. One thing to keep in mind is that VA loans they're typically through private lenders. They're partially or fully insured by the VA. The fifth is FHA 203K. And so this is an FHA subset that allows borrowers to finance in certain repairs to be done to the property that they're purchasing. It sounds good in theory, but it has kind of gone on the wayside, especially the last 5 years or so, because it does require a substantial amount of paperwork, and there have been frequent delays that borrowers have seen when they go with the FHA 203K. The sixth is hard money or private funds. This is when you borrow from a person or business for the sole purpose of real estate investment, typically. And so this is usually at shorter time frames, higher interest rates, and it's usually not through a lending professional, a financing professional, but through someone who is looking for higher returns than they might get elsewhere. And the seventh and the last is home equity line of credit, or HELOC. And so this is pretty simple. It's just when someone wants to roll the equity they have in current properties they own into a new property. They'll use that home equity line of credit as a way to finance the purchase of a new piece of real estate. Those are the 7 most popular ways to finance real estate today. If you're looking to buy or sell real estate, reach out to me through my contact information below. If you have any thoughts or questions, I'm always at your complete disposal. But in the meantime, take care, and I appreciate you watching.